Rick Santelli standing by at the CME in Chicago. Rick, about time for these numbers, and I'm going to hit you right at 8:30.
Yes, these in industrial production. You know, auto tariffs were announced on March 26. This is March data. We might start seeing some impact. Retail sales, the advanced look for March, exactly as expected, up 1.4%. Still don't see revisions, and do keep in mind, we want to see ex-autos. Ex-autos, 0.5, a little better than anticipated. And even though it is a fraction of 1.4, it is obviously a pretty good number when you consider that it's the best number of the year. We had up 0.6. That was in December. And last month, in revisions coming in, last month was revised double plus from 0.3 to 0.7. And the reason I'm really concentrating on autos is that big ticket purchase item that many may be looking to get ahead of potential tariffs on, maybe a bit reflected in these numbers. Now let's strip out gas in addition to autos, and it's still really strong. Up 0.8, up 0.8. That would be the best number since SEP of last year when it was up 1.2, and that now equals our last look, another revision from 0.5% to up 0.8. And finally, the core number, the control number, input in other data like GDP, comes in on the light side, up 0.4. We're expecting a bit more horsepower there, but in the rearview mirror, up 1%, zooms up to 1.3. 1.3 would equal where we were in September. You have to go all the way back to Jan of 23 to find a higher number. So very positive revisions, positive headline number, maybe a little autos, kind of March 26, 25% tariff. Get ahead of that to some extent. We see Treasury yields haven't moved much. The yield curve has implications. Short-dated Treasury yields, most associated with the Fed, are down a handful right now at 380. You're only down 2 in a 10-year at 432. Couple of things real quick, guys. Bank of Canada at 9:45 today. You know, they had a really, really weak jobs number on the 4th of April, down a little over 30,000. So many aren't expecting anything, but that's the wild card, that weak labor. And also ECB, central bank tomorrow. We want to pay close attention. And today, $13 billion 20-year bonds at 1 o'clock Eastern. Joe, back to you.